Hello and welcome to another session of the My Solo 401k Financial Daily Webinar Series. Thank you so much for joining. We're excited today to discuss how to save $70,000 to a Roth IRA at Interactive Brokers. If you're checking us out on LinkedIn or Instagram or X or YouTube, please subscribe as we go live twice a day. And that way you'll get notifications of when we go live. We go live once at 10 a.m. Pacific, 1 p.m. Eastern. Then we're back again at 1 p.m. Pacific, 4 p.m. Eastern. If you do have questions or topics you want to discuss, whether on this topic of how to save $70,000 to a Roth IRA at Interactive Brokers, or even another off-topic question, please don't hesitate to chat it over as we're happy to discuss questions and topics. Today's roadmap is going to be unlocking $70,000 tax-free with your solo 401k. So here's what we'll cover. Solo 401k deep dive. So understand the solo 401k, the mega backdoor Roth, which is how you're able to make $70,000 in contributions, for example, for 2025. The mechanics of making those contributions. So specifically, it's going to involve making what's called after-tax contributions. We'll dive more into what that means. And then ultimately integration with an Interactive Brokers Roth IRA account. So the goal will be for those funds to ultimately end up in a Roth IRA at Interactive Brokers. And so at the end, we want to just give you some actionable steps in a roadmap of where we're headed. All right, so the presentation is being provided for educational purposes only and should not be construed as tax, legal, or investment advice, nor as a solicitation. When making an investment decision, please consult with your tax attorney and financial professional. So let's start out with the question that's being chatted up. So thank you so much for bringing the question. Are $650 initial account setup fee tax deductible? So the answer is yes. I mean, that's going to be a business expense. So essentially your self-employed business would be setting up its own 401k plan. So that can be claimed as an expense, like any other business expense. So that's going to reduce the taxable income of the business, just like any other expense. So you can share that with your tax advisor so it can be claimed accordingly. Now, what's great is that our plan will actually make the self-employed business or individual, you don't have to have a formal legal entity to set up a plan, will make the self-employed business or individual eligible to claim $1,500 in solo 401k tax credits. So we've designed the plan to be eligible for $1,500 in tax credits. That's $500 per year for 3 consecutive years. And those tax credits are available if a self-employed person is setting up a new solo 401k plan, or even if you have an existing solo 401k plan that you're now upgrading to our plan. So we do that automatically. We provide a link to a deep dive webinar we hosted with an IRS enrolled agent regarding how to claim those credits, etc. So that's going to further offset our fees. As a matter of fact, if you added up all of our fees over the first 7 years, it wouldn't even amount to $1,500. So that those $1,500 in tax credits is going to more than cover our fees for the first 7 years. And so unlike a deduction, like we were talking about at the outset, a tax credit actually reduces the tax liability. So it's a dollar for dollar reduction in the tax liability. So in that way, it's much more powerful than even a tax deductible fee. Well, great. So thank you for bringing the question. We love to discuss questions. But for now, we'll turn to the topic at hand, which is how to contribute $70,000 to a Roth IRA in 2025 to an IRA at Interactive Brokers. So the way that someone could do that is through a mega backdoor Roth solo 401k. So we first want to understand, okay, what is a solo 401k? How do I qualify, etc.? So a solo 401k is a self-employed retirement plan. In other words, it's a retirement plan, specifically a 401k that's available to self-employed individuals. So in order to be eligible to set up any type of solo 401k, you need to be self-employed with no full-time W-2 employees, working for any business owned by that person or a spouse, if any. So self-employed means you're reporting earned self-employment income on your taxes, again, with no non-owner, non-spouse, full-time W-2 employees. So that's what makes you eligible to set up a solo 401k. Now, in order to be able to make a mega backdoor Roth solo 401k contribution, you need to work with a provider like us that offers a plan that allows for mega backdoor Roth solo 401k contributions. So a mega backdoor Roth solo 401k contribution really is 2 steps. You need to be able to make voluntary after-tax contributions. So you have to have a plan that allows for voluntary after-tax contributions. For example, none of the big brokerage firms like Fidelity, Schwab, they offer basic solo 401k plans, not plans that allow for after-tax contributions like our plan does. Now, they'll open up accounts for third-party plans like our plan that allow for after-tax contributions, but their basic plan doesn't allow for those types of contributions. So that's the first requirement, a plan that allows for voluntary after-tax contributions. The second requirement is a plan that allows for in-service distributions, because in order for these funds to ultimately end up in a Roth IRA at Interactive Brokers, they're going to have to be transferred out of the plan. So the rules allow you to distribute voluntary after-tax contributions out of the plan, such as to a Roth IRA. But in addition to the rules, you need to have a plan, meaning the documents that create your plan, like our documents do. You need to have a plan document that allows for in-service distributions. So that's the foundation. That's the basics. Of course, it's going to make sense to work with a provider like us that has deep experience in helping clients through the process, through the required compliance steps. So for example, when you make those voluntary after-tax contributions, it's very important that they are deposited into a separate voluntary after-tax account. So as part of our onboarding process, we're helping customers open up accounts at the bank or brokerage of choice, even Interactive Brokers. So you could have a brokerage account at Interactive Brokers for your voluntary after-tax solo 401k funds, and then transfer those funds out of that brokerage account for after-tax solo 401k funds to a Roth IRA at Interactive Brokers. Now, when you make the first step, when you first deposit the after-tax contributions, that doesn't need to be reported on your personal tax return or your business tax return. But the second step, when you move the money out of the after-tax account to the Roth IRA, that is reportable. It needs to be reported on a 1099-R. So that's why it's going to also be important to work with a solo 401k provider like us that's going to help provide that ongoing compliance support. For example, we handle the Form 1099-R as an optional free service. In other words, no additional charge. Clients just have to let us know that they've moved the money from the after-tax account to their Roth IRA in a timely fashion, since we don't have access to their accounts. But we have an online form that makes it super easy, that can be submitted in just a matter of minutes, 24/7 on our website. That's how we capture that information to know that the clients need a 1099-R. Now, the benefits is that you're able to make relatively very high contributions. For example, 10 times the regular IRA contribution limit for 2025. With a solo 401k plan like ours, you could contribute up to $70,000 as a voluntary after-tax contribution for 2025, and then transfer those funds out of the plan to a Roth IRA. That's how we end up in our, the title for today, which is how to contribute $70,000, where the funds end up in a Roth IRA at Interactive Brokers. So in short, you're eligible because you're self-employed with no non-owner, non-spouse employees. You open up a solo 401k, specifically a solo 401k plan like our plan that allows for mega backdoor Roth contributions. You can contribute 100% of your self-employment compensation, dollar for dollar, for 2025, up to $70,000 as an after-tax contribution. So that goes into a separate after-tax account, could be a brokerage account at Interactive Brokers. Then you move that money out of the after-tax solo 401k account to a Roth IRA. And then you let us know about that move so we can prepare the required 1099-R. Now the money's in the Roth IRA. It's got that potential for tax-free growth. And here's another good slide that goes through those steps, right? Step one, you make the contributions, those after-tax contributions, and we help our customers open up accounts at the bank or brokerage of choice, including interactive brokers, convert to the Roth IRA. Step two. Step three, let us know about that move. You can find our online forms easily at mysolo401k.net/forms. That's how we capture the information to add your plan to the queue to prepare the 1099-R. Now, there is going to be a deadline to make the contribution, the first step, but there is no deadline for the second step to move the funds out of the solo 401k to the Roth IRA, to move them out of that voluntary after-tax account to the Roth IRA. So for 2025, as long as someone signs up with us by the end of the year, that'll preserve the ability to make all types of contributions for 2025 by their business tax return deadline, including any time we file an extension next year in 2026. And then if you deposit the money in 2026 and then move it, of course, in 2026 to the Roth IRA, it's going to be reported on a 2026 1099-R, because that 1099-R is not reporting the contribution, it's reporting the conversion, which of course is happening. It may be happening next year in 2026. Here's a good slide as it visually helps us see how it works, right? This person has a one participant solo 401k plan. Let's say they've got some pre-tax money in one account. They've also got a separate account for after-tax contributions. So those after-tax contributions go into that after-tax account before they get transferred out of the solo 401k over to a Roth IRA. All right, great. Well, that takes us to the end of the slides we wanted to share today. If you're finding this to be helpful, please like this video on whatever platform you're on, whether you're on Instagram or X or LinkedIn or Twitter or, YouTube. Also, if there's others in your network that you think might be interested in this topic, please share it. Just helps us to get the word out to other self-employed individuals, solopreneurs just like you. As you may imagine, there's a growing number of self-employed individuals who may be looking to catch up on their retirement savings. So this could be a useful tool for them. We also want to invite you to our community, mysolo401k.net/my-community. We have over 30,000 members. There's forums. There's a library of videos and webinars. It's totally free to join. All are welcome. You can easily and quickly join at mysolo401k.net/my-community. And I see we got another question. Thank you so much for bringing the question. I plan to transfer my regular IRA funds over. Should I open an IRA LLC account? If I plan to use both current 401k and IRA funds, am I supposed to open two accounts? So if the goal is to be able to invest, and thank you so much for bringing the question, but if the goal is to be able to invest in alternative investments and the individual is self-employed with no non-owner, non-spouse, full-time W-2 employees, they could open up a solo 401k. And as long as the IRA funds are not in a Roth IRA, in other words, they're pre-tax IRA funds, then you could transfer pre-tax IRA funds to that one solo 401k. You could transfer former employer 401k funds to that solo 401k. And now you can invest via that solo 401k. You don't need to have a separate LLC. The solo 401k owner can have direct checkbook access. You don't have to work with a third-party IRA custodian like you would if you set up an IRA LLC. Now, if the money's in a current 401k, you wouldn't be eligible typically. You'd have to check with the current 401k provider, but typically you're not going to be eligible to transfer those funds out until you either quit, separate from service, in other words, or you turn at 59 and a half years of age. But of course, the prerequisite to get you in to be able to open up a solo 401k is you need to be self-employed with no non-owner, non-spouse, full-time W-2 employees. Now, if you're not self-employed, or if you are self-employed, but you have, say, non-owner employees working for your business, then the option would be the IRA LLC if you're looking to be able to self-direct those funds into alternative investments. So if you have, or if the money that you want to self-direct is all pre-tax money, let's say it's pre-tax IRA money plus pre-tax 401k money that is eligible to be rolled out, because let's say you separate it from service, that can all go into one IRA that's invested in one LLC, which is then invested via the LLC in alternative investments. So you can consolidate under both paths. Just depends on whether or not you're eligible to set up the solo 401k and you have money that's eligible to be rolled over, like former employer plan money or pre-tax IRA money. Wonderful. Thank you so much for bringing the good question. We appreciate it. So yes, please like, please subscribe, please continue to engage. We appreciate all the great engagement today. Please share with others in your network that you think might benefit. And we'll be back tomorrow with more content. As I mentioned, we go live twice a day, once at 10 a.m. Pacific, 1 p.m. Eastern. We're back again at 1 p.m. Pacific, 4 p.m. Eastern. And you can join 24/7 on the community, in the forums, et cetera, et cetera. And if you've got questions, if you're watching this on a recording, feel free to chat over questions in the comments as well. All right, everyone. Thank you so much. We appreciate the opportunity. Until next time.